existing privately held company, thereby taking that private company public without it having to go through the traditional, often lengthy and expensive initial public offering or IPO process itself.
So it's like a shortcut to becoming a publicly traded company for the target business.
Yeah. Exactly. It's often presented as a quicker, potentially cheaper alternative to a traditional IPO.
And how do they actually work? What's the mechanism behind raising the money and finding a target?
Typically, a group of sponsors, these are usually experienced investors, maybe former executives with deep industry expertise. They raise the funds from other investors through the SPAC's own IPO. Crucially, at the time of the SPAC's IPO, they often don't have a specific target company identified.
They don't know who they're buying yet.
Not always specified upfront. Doing so allows them to avoid some of the extensive Securities and Exchange Commission (SEC) disclosure requirements that would apply if a target was named. So early investors in the SPAC are essentially betting on the sponsor's reputation, their track record, their ability to find a good private company to merge with.
So you're trusting the management team's skill. What happens to the money raised?
The funds raised are generally placed in a trust or escrow account. They sit there, usually earning some interest, until a target company for acquisition is found and announced. Once a deal is proposed, the SPAC investors typically get to vote on it. And importantly, if they don't like the proposed deal, they usually have the option to redeem their shares and get their initial investment back, plus any interest earned.
Okay, so there's an exit if you don't like the company they pick.
Generally, yes. It's worth noting SPACs have become much more regulated since the 1980s. Back then, they were known simply as blank check companies, and unfortunately had a bit of a shady reputation, sometimes associated with fraud. The structure is more robust now.
So what are the advantages that have made them so popular recently? They've attracted big names, billions in capital. Why the surge?
Several factors. One, they can be quite affordable for initial investors. Many SPACs IPO at around $10 per unit, usually a share plus a fraction of a warrant. And they often don't experience those huge price jumps on the first day of trading that you sometimes see with really hot traditional IPOs.
Making them more accessible.
Potentially, yes. Also, the newer breed of SPACs has often targeted companies in really sexy, high-growth sectors, think electric vehicles, space tech, fintech, online gambling, health tech. Companies like Opendoor, Clover Health, Nikola, Virgin Galactic all went public via SPACs.
So they tap into exciting trends.
They do. And while large institutional investors often get the first crack at SPAC IPOs, the sheer number of shares often sold can sometimes make it easier for individuals